Okay guys, so welcome back to those of you that have been logging in for our Monday evenings on our personal tax. If it's your first week, welcome. It's great to have you here. So just to let you all know, at the end of the session, I will send out an email with all of the files that we've gone through today, all of the feedback, and also a link to the recordings as well. So you don't need to ask me for it. I will send it out as soon as it's available. It will be sent out at the end of the session. If you are watching on YouTube and you do want to log in for the live sessions, if you go onto the First Intuition website, you will be able to register. I will send out before next session a link to all of the past recordings and all of the pre-work going forward. So you don't have to chase me for it. It will be sent out. But if you do want it really soon, if you drop me an email, you'll get pinged back my out of office, and there is a link on there as well to the Dropbox and all of those files. So if you do want to do those, that's how you can get access to them. Just to let you all know, those of you that have been logging in, we are going to have one more session together. I know last week I said that this would be our last one, but I am going to do next Monday evening. So there's an extra one. That will be at 7 o'clock. And then from the following week, so from the 6th of July, it's going to be moving to my colleague Carol, and the time is going to be changing to 5:30. So I will send that out to you on an email at the end of the session as well. So if you are logging in live, obviously I've told you now, but I will obviously send it out at the end just to make sure you do remember. So that's one more week at 7 o'clock next week. And then from the week after, we'll be moving to 5:30. Good. Okay then guys, so let's have a look. So this evening's inheritance tax. So I did say it is my favourite tax. It is. I'm not sure that I can convince you all that it's the best tax in an hour, but I'm certainly going to give it a go to hopefully make sure that you guys do enjoy it. So as always, we're going to start off with a Menti quiz. So if this is your first session with us, the way that we do this is if you grab your phone or another device, you can log into this quiz using the website www.menti.com and popping in the code 440189. And it will give you a little bobblehead that's going to come up on the screen. And we're going to go through 5 questions together. So you will get points for the fastest answer and points obviously for the correct answer as well. So that's obviously the most important one. If you don't have another device to follow, don't worry. You can follow along on the screen. And if you are going to do that, if you did want to write in the chat box, that's not a problem. But if you could just wait to the last couple of seconds, that would just be really appreciated, just to make sure that it gives everyone a fair chance to be able to answer all of these questions. So we've got 5 questions. They're on inheritance tax this evening because that's our topic for tonight. We've got 19 people, so that's roughly missing a few, but hopefully you can play along at home if you do want to. We'll just give it another 30 seconds and then we will get started. Good, this is just a little bit of fun. So sometimes people say at the end, oh, but I didn't do very well. Actually think of that as a positive. Anything that you get wrong today, hopefully it's something that you've learned that if it did come up in your exam, you'll be able to get it right. So if you know it already, fabulous. If you don't, think of it as a positive, that if it comes up in the exam, hopefully you'll be able to get this right. Remember, we have got our tax tables. There's lots of information on your tax tables for inheritance tax. And when we change over to the other screen after the quiz, we will have a look at what information you do have available to you in the exam. Right, let's get started. If anyone wants to join late, you can do. You just might miss the first couple of questions. So our first question of this evening then. So let's have a look. Look down on your phones. What is the amount of annual exemption for your exam? So this is given to you in your tax tables. I always give you slightly longer to answer the first question just so we can get into it. But your options are 6,000, 3,000, 325,000, 12,500 or 12,000. That was quick. Super. Always good when the one that I'm looking at is the one that pops up in your exam. Those other ones are all relevant for our exam somewhere, but not for our annual exemption for inheritance tax. £6,000, you may have got that wrong, because how many years can you carry forward your annual exemption if you haven't used it before? Perfect, thank you Lucy. 1, you're absolutely right. So anyone who said £6,000 might have got a bit confused, because in a lot of questions you might have 1 year of annual exemption and 1 year carried forward, which obviously gives you £6,000. But it is £3,000 each year, and you can only carry it forward for 1 year. What year do we use first, the current year or the carried forward? Perfect, well done, Lucy, absolutely. A few more answers popping in there as well. You're absolutely right. You always use the £3,000 from the current year first, and then if you haven't used anything up from the prior year, you can bring forward the £6,000. And we've got a couple of questions this evening where we're going to see that coming into play. We'll talk about the 325,000 in a minute. I'm going to leave that one for the moment. 12,500, anyone tell me what that's for? We've already seen it in our revision classes. Super, lots of correct answers there. The personal allowance, well done, guys. And what about the £12,000? Can anyone remember what we've seen that in before? Absolutely, capital gains tax, it's your annual exemption. Super, well done there for everyone that's written in on the chat box. So they're all relevant, they're just not relevant for your annual exemption for your inheritance tax. So well done to those 12 people that got that right. Let's see who was the quickest then. What it does to our leaderboard. Lucy, so she's going to be at the top of our leaderboard after question 1. Let's see what happens as we go through our next 4 questions then. Question 2, let's see how we got on. What is the nil rate band for your exam? Remember, we're all talking about inheritance tax here. 265, 300, 325, 150,000 or 175,000. You've got 18 seconds left. This is on your tax table, so if you have got them in front of you, you could look it up. But let's see how we get on. Everyone's voted, that's good. Fabulous. I did kind of hint at it in the previous question that we were going to talk about it in a moment. You're absolutely right, £325,000. Good stuff. 265 and 300, they're just old rates. They're just old ones from a long time ago, actually. But you may see them if they go back a long time in your questions. I think it's not going to come up that often. What's 150,000 for? Anyone remember? Super, well done, Alex. The additional residence nil rate band. So we're going to see that in our question that we look at tonight as well. You're absolutely right. We may have an additional nil rate band for residency, and we're going to talk about that when we get on to our question. 175 is what the residence nil rate band is going to go up to in the future. So it was just an extra number that was in my head. Perfect. So well done to those 20 people. Let's see what it's done to our leaderboard. Scott's the fastest and he's overtaken Lucy at the top. So let's see what happens on question 3. Well done, guys. Leaderboard's just a little bit of fun. What is the magic number of years in inheritance tax? So after how many years does the nil rate band reset? So 1, 2, 5, 6 or 7. This is a really important number when you're doing inheritance tax. It really does make sure you do need, it's very crucial that you do know how many years it resets after. Everyone's voting nice and quickly, which is great. Super, well done to those 14 people. It's every 7 years. 1 year is how many years you can carry forward your annual exemption. The others were just red herrings in this question. So the only one that we was interested in there is every 7 years. So that means you can make a gift of £325,000 and you won't have to pay any inheritance tax. And you can do that every 7 years and that nil rate band will reset in your questions. So it's probably the hardest part of inheritance tax, getting your head around those 7 years. And unfortunately, we don't have time to go through it in detail this evening. But if that does confuse you when I say it, I'd pop it on your revision list to make sure you go back to your notes and really, really, really practice that resetting of the nil rate band every 7 years. Good, okay. 2 more questions then. Let's see what that did to our leaderboard, and then we can have a look at our 4th question of this evening. Scott's the fastest, so he's going to stay at the top. Lucy's still quite close behind. So with 2 questions to go, let's see how that affects our leaderboard. So hopefully we should be getting this one confidently correct. It's on your tax tables if not. What is the rate of death tax for inheritance tax? So if somebody has died, what is the rate of tax that we should be applying in our question? So we've got 40%, 20%, 25%, 13.8% or 7.5%. So some red herrings there in that question. What is our relevant rate of tax if somebody has died? Take a guess if not. Got 1 second to go. Good to see most of us there with our 40%. Brilliant to see no one got 13.8 and 7.5. What are they for? Can anyone tell me in the chat box? Not those ones, a 13.8 and 7.5. Perfect, dividends, absolutely spot on, guys. So they were just red herrings, they are rates of dividends. The 20 and the 25%, now again, these are ones that are relevant for inheritance tax. We can't go through it in detail because we only have an hour, but if you have popped 20 and 25% in, these are rates of tax that you would pay if you made a gift into a trust during your lifetime. So if you have popped those in, just go back to your notes and make sure you're really, really comfortable when you use 20% and when you use 25%. Super. But for these 20 people here that pressed 40%, absolutely spot on. Well done, guys. You're absolutely correct. When somebody has died, you do pay a rate of 40%. Good. Let's have a look at what that did to our leaderboard then. Lucy's the fastest this time. That hasn't quite taken over Scott. So let's see what happens with our last question then. This again is in your tax tables. What is the amount of marriage exemption available from a parent to a child? 250, 1,000, 2,500, 5,000 or 10,000? Let's have a look there. So 14 seconds to go. So if you're not sure, you might as well guess. You're not going to suddenly come to you, but it is given to you in your tax table. So if you have got them open, you can look it up before you make your answer. So last couple of seconds. Super, well done to those 20 people. You're absolutely right. It's £5,000. Good. Who can give 2,500? 2 sets of people. Grandparents, perfect, absolutely right. Not relatives, Louise, close. Perfect, one party of marriage to the other. So if I was to give my husband £2,500 as a gift when we got married, that would be exempt as well. So perfect. So grandparents or from one spouse to another. What about the 1,000? Who can give 1,000 under the marriage exemption? Perfect. Any other person that definitely didn't come to my wedding. But yes, absolutely any other person, they can give £1,000 and that would always be exempt from inheritance tax. And remember, it's the person giving the gift away that would have that exemption. So if I was to give it to my son, it would be me that I would have the £5,000 exemption on my inheritance tax. I would never have to pay any inheritance tax on it. Why is 250 relevant? Small gifts, brilliant. Everyone's doing really well on inheritance tax. That's fantastic. You're absolutely right. Well done, guys, that are writing that on. £250. You can give away every year £250 to anybody. So to any cousin, relative, boyfriend, girlfriend, friend. As long as you don't go over that 250, it's not going to eat away from the annual exemption. So I've just got a question there. Can each parent give £5,000? Yes, they can, because it's the parent that gives it away that does get that exemption. It's not the person that receives it, it's the person that gives it away that's going to get that exemption. So yes, absolutely. If you have 2 parents, one parent will get a £5,000 exemption, the other can get a £5,000 exemption, and you can receive £10,000. Super. Okay, that was our last question. So let's have a look at what that did to our final part of our leaderboard. Who's going to end up on that top spot? Oh, look, Scott and Lucy both tying, but Scott just holding on to it right at the end there. So absolutely fantastic. Well done there to him. But the most important thing is, guys, that if you just learned something, from that quiz, that's the most important thing that you do take away. Good. If there are any questions on that, please do pop them in the chat box. While you're doing that, I'm just going to switch over to my other screen so that we can have a look at our question that we are going to be looking at this week. So if there are any questions, just pop them in the chat box while I just change over my screen. Good. Does that mean everybody's happy then? Super stuff. So hopefully you can see on the screen now the mark allocation from our task bank. Can everybody see that? Good stuff. Just checking that we're not having any technical issues, always good. So the two tasks that we are going to deal with this evening is task 12 and task 13. So these are your two inheritance tax tasks in the exam. They're both worth 6 marks, so they've got an equal weighting that we're going to be looking at. And we're going to go through an example of each of these as to how we would get our 6 marks. Remember, in the exam, you have got your tax tables. So remember, if you're a first and tuition student, these are in your folder. If you are not, you can get them off of the AAT website. These are available to you. And there's so much information that you are given for inheritance tax. So you're given the nil rate band and the residency nil rate band that we just looked at in our quiz. You're looking at the rate of tax at 40% and 20% for lifetime tax. Just be careful with that though, because it does depend on who's paying the tax, whether you use 20% or 25%. So just look back on your notes. Unfortunately, we don't have time to go through it in detail, but go back through your notes and just make sure you're really, really comfortable with that. You've also got the rates of taper relief. Who can tell me when we need and when we use taper relief? What's taper relief talking about? Anyone? People are almost there. So Nadine said when you pass away within the 7 years. We've got when it was less than 7 years. There we go. That's what we're looking for. Since the lifetime transfer. Absolutely. This is only relevant when you've made a gift in the lifetime and then you have died. So what we do is we look at how long it is between the gift that was made in the lifetime and how long it is until you've died. If it's less than 3 years, the whole amount is you're going to have to pay tax on at 40%. If it's between 3 and 4 years, 4 and 5, 5 and 6, 6 and 7, then you can get a percentage reduction in the amount of tax that you may have to pay. Now, the reason for this is because I was to give a gift away and to live for 7 years, there'd be no inheritance tax to pay because it would drop off the end. But if I died after 6.5 years, it seems a little bit unfair that because of that 6 months, I have to actually pay inheritance tax at 40%. So this is a scheme to try and make it a little bit more fair. Now, what I see quite a lot in exams is that people are at the death date and someone's left something in the will and they apply taper relief. You can't have taper relief because you have to think about death and the will as one final gift at death. So there is no time difference between making that gift and dying. So the full thing would be chargeable to inheritance tax. So you only need to think about this when there has been a gift made in the lifetime and then that person has gone on to have died. Does that make sense? Is there any questions on that? Good, okay, hopefully. And just pop in the chat box if there are, we can always come back to it. And the final bit you've got for your inheritance tax on your tax tables, we've gone through all of this. So we've got our annual exemption of £3,000. We've got our small gift, which we mentioned, which was £250 per person per tax year. And then you've got your marriage or civil partnership. We've said we go £5,000 from a parent, £2,500 from a grandparent or another spouse, and £1,000 from any other person. So that's all available to you in your tax tables when you go into your exam. Super. If there are any questions on that, pop them in the chat box. But if not, what I'm just going to quickly do is just send these 2 tasks on the chat box, just in case anyone did register this evening, since this morning, and don't have access to the questions. So they should be coming through on the chat box now. So just in case you didn't have them sent to you on email, don't worry, now you've registered, you will still receive these at the end. But just if you do want to follow through, they've now come through to the chat box. You should now be able to open those if you haven't got access to them. But the first question that we're going to have a look at is task 12, revision example 3. So remember, this is worth 6 marks, and there is 2 inheritance tax questions that you're going to have a look at. It's split into 3 parts, so A, B and C. So the first one is a true or false tick box, sorry. So let's have a look at the statements, and we've already looked at a lot of this in our Menti quiz that we just went through. So let's see if we can identify whether or not these are true. So first one then, Harry received £30,000 from his grandmother in her will to put towards his wedding. The £2,500 marriage exemption will be deducted from the value of the transfer. Is this true or is this false? So pop in the chat box for me. Absolutely, false, perfect. And there's a couple of questions there. Isn't this for lifetime transfers only? You're absolutely right. In her will. So that means that when she's died, she's left it in her will. This marriage exemption is only available for lifetime gifts. If someone leaves something to you in your will, they've left it on as a result of their death. So that would be part of their death estate. So that's actually false. So well done to those of you that spotted that. That's absolutely brilliant. So just really make sure that you carefully read the question. Good stuff. Is everyone happy with that? Has anyone got any questions on that? Good, spot on to those guys that picked up on that. Let's read our second question then. So, gifts to political parties are classed as exempt transfers for inheritance tax. Do we think that's true or do we think that's false? Lots of answers coming in. Fabulous. Well done, guys. Everybody who's answered got it spot on. Perfect. You're absolutely right. That is true. What else is an exempt transfer for inheritance tax purposes? A charity. Perfect. What else? And a spouse. Perfect. Well done, guys. Absolutely. So for your exam, also what would be exempt transfer would be to a charity or to a spouse. So if you see either of those come up in your exam, then they would also be exempt. The examples that you're popping in the chat box now, they would have to be charities. You're not going to see museums, university and sports clubs in these questions unless they are telling you that they are a charity. So you don't need to worry about that. Don't need to worry that level of detail. Good, well done, guys. Any questions on those? Are we all happy with the answers there? Super. Let's have a look at part B then. So No, you're absolutely right about the political party. It does need to be a qualifying political party, but they're not going to ask you what that is at AAT. They'll only ask you that at more advanced levels. So in the exam, if you see political party, you can assume, because they're not going to expect you at AAT to know what qualifies for that. Okay, part B then, let's have a look. So let's have a look at what we're trying to achieve for this second question. So in 1920, that's always really important for inheritance tax purposes. Why do I care about the tax year? If I'm talking about lifetime gifts, not quite the 7 years, not for lifetime gifts. Perfect, the annual allowance. You're absolutely right. But Nadine, it might be important that 7 years if they do go on to die as well. So that could be important. But for this question, we are talking here just about lifetime gifts. So in 1920, Vivian made the following gifts, having previously never made any gifts to anybody. Why do I care about this sentence? Having previously made no other gifts to anybody else. Well done, Lucy, spot on. We've also got the previous year's annual exemption. So we've got this year's annual exemption available for 1920, and we can also use last year's annual exemption because we've never made any gifts to anybody in the past. You're absolutely right. I just spotted someone's popped in about the residence allowance. I'm talking about lifetime gifts. Do I care about the residence allowance? No. Why not? It's not a house, no, but if there could be a house in there, they've not died. That's what I'm looking for. Perfect. So the £325,000 is relevant if you are talking about a CLT, so a gift into a trust. However, you only get the resident nil rate ban when there has been a death. So in this question, we're looking here, what is the maximum for inheritance tax purposes on the gift to the daughter if she were to die in 2021? We're actually going to be looking here about the lifetime implications. So we don't need to worry for this question about that residency nil rate ban, but you're absolutely right, we do need it for our next question. So we will look at that in a moment. Good, so let's have a look. So what is the maximum value for inheritance tax purposes of the gift to her daughter in January 20 if she were to die in 2021? So I always think it's really important to work out what one they are talking about. So they are talking about this gift here. So in January 20, what is the maximum value for inheritance tax purposes that we would use for that gift? So what we need to do is we need to work out essentially whether any annual exemptions will be available against that by the time we get there. So let's look through these gifts. Now, you always want to go through chronologically for inheritance tax. So you want to start off with your first gift in June 2019. So Vivian has made a gift of £50,000 to her husband. What do we know about that? Super, guys, absolutely. It's a spouse. So because it's a spouse, it's going to be exempt. No inheritance tax implications, no use of our annual exemptions, nothing that we need to worry about there. Because it's to a spouse, it's going to be exempt. Super. September 2019. Is that a potentially exempt transfer or is it a chargeable lifetime transfer? Hopefully these phrases are ringing true to you. No. A pet, perfect, there we go, absolutely spot on. Well done, Alex, well done, Lucy. It is a potentially exempt transfer. So I didn't go through these because this should be revision, But remember, when you are talking about a potentially exempt transfer, this is a gift to any other individual, so another person. So her best friend would be a person, so it would be a potentially exempt transfer, which we abbreviate to a PET. And for a CLT, that is a gift into a trust, and that stands for chargeable lifetime transfer. So if you don't know what these phrases are, and a lot of you did write CLT above, so I'm sure that you have seen them before, make sure you pop them on your revision list to know the difference. So a CLT is called a chargeable lifetime transfer because if you do make a gift into a trust during your lifetime, you will have to pay some inheritance tax on that. For any potentially exempt transfers, you won't pay any inheritance tax during your life and will only pay tax on that if they die within 7 years. Is everyone comfortable with that, or is there any questions on that? Hopefully that all rings true to you from your tuition that you've gone through. Good, okay, so no questions are coming in there. So September 19, we've got £3,000 gift to her best friend. That will be a PET, so a potentially exempt transfer. So there'll be no tax to pay on that during her lifetime. But what can we use against that PET? Super, our 1920 annual exemption. You're absolutely right. So 1920 annual exemption, how much is that? £3,000, perfect. And I've just seen someone right there, current year as well. So we can use the current year annual exemption of £3,000, perfect. And have I got anything left now of my 1920 annual exemption? No, perfect, super. I've used it all up. So I haven't got anything left of 1920. Good. Let's have a look then at our next one. So December 18, £1,500 to a trust. Is that a PET or is it a CLT? Perfect. Most of you, I think one person just put PET in there. Remember over here, we had a little bit of revision, didn't we? So a PET is a potentially exempt transfer. So it's any gift to an individual person. A CLT is a chargeable lifetime transfer, which is any gift to a trust. You don't really need to know this for the question, but it's just a little bit of revision. That would be a CLT. So it's going to be chargeable to tax. We're not going on to do the lifetime tax, but what we're going to do is we're going to work out how much annual exemption is available against that. So it's in tax year 1920, but have we got anything left of our 1920 annual exemption? No, we've used it up. So the 1920 has all been used up. We've got nothing left. But a couple of people have been writing in the chat box. Remember, we can go back 1 year if there is some available of the previous year's annual exemption. So the previous year would be 1819, and we've been told that she's never previously made any gifts to anybody. So the full £3,000 would be available. So this £1,500 can use up £1,500 of the 1819 3,000, which leaves us with how much left? Super, and we're going to need that in a minute for the last part of our question. Now there's a lot of information in that little bit there. Has anybody got any questions before we move on to the final gift? Super, well done guys. If anyone does suddenly have a question, please pop it in the chat box and we can always go back over that then. So the question's asking us, remember we've got to use it chronological, how much is available for our gift on January 20? So I've just seen a question from Louise. I'm just going to answer this before I do move on to that last bit. So is a CLT always chargeable? Yes, it is. So it's a chargeable lifetime transfer, but you can use your annual exemption against it, and you can also use your £325,000 of your nil rate band. So because this is, let's say that was £150,000 rather than the 1,500, you would be able to use your annual exemption and then the nil rate band on it as well. So that wouldn't actually have any tax chargeable on it because it would be too small. Does that make sense, Louise? Okay, perfect. You're happy with that? That's probably why it might not have always seemed like it was chargeable, but because it's chargeable to tax, you would then have your nil rate band that you'd look at. Whereas as it was a pet, you'd never pay any tax during the lifetime, only if they died within 7 years. Good. Super. So let's have a look then at this January 20. So we've got, for our last part, £10,000 to her daughter as a wedding present. So the value of the gift is £10,000. Let's just pop some notes down here because remember that is our question, £10,000. What would you use first against that £10,000? If you think back to your Menti quiz and also to your tax tables. Good, well done. Absolutely spot on, lots of people there. So first of all, it's to her daughter as a wedding present. So remember, we've got our marriage allowance. We always use our marriage allowance before our annual exemption because remember, if you don't, then you'll end up wasting that annual exemption. You could use it on something else. So first of all, we've got our marriage exemption. It is from a parent to a child. So £5,000 would be covered by our marriage exemption. And Louise is absolutely spot on. Now less the 1,500. But what I'm going to do, just for completeness so that everybody's seen it, I'm just going to say annual exemption 1920 has all been used up. Annual exemption 1819, so our carried forward, we have £1,500 left that we can now use against that gift. Now that's how you would show it in a long form question. You wouldn't get any extra marks for that in this question because it's just obviously a tick box there. But if that was to come up in your longer form question, which we're going to see in a moment, that's how you'd want to do it because there will be a mark for the current year and there will be a mark for the carried forward as well. So you want to make sure that you really show the marker that you do have the understanding that 1920 has been used and 1819 you've got 1,500 left. Last thing to do then is just to work out what would be left. And it's £3,500 would be your answer. Is there any questions there? Good, I've got another question for you then. So she makes this in January 20. Does she pay any tax during her lifetime on that? Would it be a pet or a CLT? A pet, perfect. So if it's a pet, do we pay any lifetime tax on pets? No, perfect, absolutely. So in January 20, when she gives that money over to her daughter, there'll be no tax to pay because it is a pet, but she's going to die in 2021. So that's within 7 years. So will there be some inheritance tax to pay on that gift? Yes, absolutely. Now remember, it will be covered by the nil rate band. So looking at this question, if there was nothing else going on, there'll be no tax to pay because it'll be covered by the nil rate band. But if it was £1 million, for example, and it was obviously above the nil rate band, what rate of tax would you need to calculate on that? 40, spot on, perfect. And who would pay the tax? Would it be Vivian or the daughter? The daughter, spot on, perfect. Obviously, this question does not take you to that level of detail. So I'm just trying to obviously test you. You're absolutely right. If this was a CLT, it would be Vivian who would be responsible for paying the tax during the lifetime. But when Vivian's died, it would be the recipient of the gift that would then have to pay the tax. So in this scenario, it would be the daughter that would potentially have to pay some tax on that. if it was over that nil rate band. Well done, everybody. That was really good. I just wanted to try and obviously test us to see what our understanding is. You're absolutely right, Louise. You can't pay tax when you're dead, but remember, on your death estate, the tax will come out of the death estate. So you do technically pay some tax when you have died, because it will come out of the death estate, and then the person that receives the rest of it will obviously get it. I'm not going to go into that comment, because I actually think inheritance tax is fair, because you do pay tax on every source of income you get. So anything you've got left at the end, I do actually think it is a fair comment, but most people don't agree with me, and it's only because I know a lot more about annual exemption. So last question before we look at part C then, how much maximum exemption for a husband? There isn't one. So that anything that goes over to the husband would be exempt. What you then need to remember is that when the husband died, he would then have double the amount of estate. So we're going to have a look at that in a little bit, about how much nil rate band he would have available. But there isn't a maximum exempt for the husband. Anything that goes over would be exempt, even if it was £50 million. But he would then have a larger estate that he would pay tax on when we go to calculate his tax in the future. Good. Any other questions there before we look at part C? Super. So this is quite a nice part. We've got a drag and drop on here, so a pick list. So we've got 2 boxes for the first part and 1 box for the second, and we've got a pick list as to the options that we can pick. So for the first box, we have either 5,000, 2,500, 1,000 or 250. So let's have a look. So the small gift exemption is which of the 4? Good, so people are really, really quick there. We've already mentioned it a couple of times. That's great to see. You're absolutely right. It's 250. That's on your tax tables as well, guys. So if you don't remember it in the exam, remember you have got it available to you. But you're absolutely right. It's £250 per tax year, per transfer or transferee. Super, perfect. What does transferee mean? You're absolutely right. The person who gets it, super. So the person who receives it, the recipient, you're absolutely right. So I can give £250 to as many people as I want, and they will always be, I spelled that wrong there, can't spell and speak at the same time, obviously. You're absolutely right, but it's the person that receives it. So for example, my nan has a financial advisor. She has 12 grandchildren. And what she does is between birthdays, Christmases and Easter, she gives all of us up to £250 a year, so that she starts to get rid of her wealth. And if she dies within 7 years, she won't ever have to pay any inheritance tax on those gifts. So it's a way, she's been doing it for a long time. It's a way for her to try and actually reduce the wealth that she's going to have in her death estate when she dies, by giving it away to all of her grandchildren. Good. Let's have a look at the second part then. Danny's married to Sandy. No extra marks for knowing what film that comes out of. They jointly own a house with 50% ownership each. Danny dies in June 19 when the property is valued at £200,000. We need to calculate the value of the property in his death estate. And the 3 options we have is 200,000, 100,000 or nil. What have we gone for? Nil. Super. Why have we gone for nil? I think someone's just got it there. Spouse, absolutely. Sorry, I've lost who said it before. Jordan, absolutely, well done. It's because it's going to his wife. So because it's gone to his wife, it's to the spouse. So the answer would be nil, because it would be absolutely exempt. Is everyone happy with that? Super. Well, I think you all did really, really well on that question. So fabulous there. Well done. If anyone's got any questions, do pop them in the chat box. But we have one more question that we're going to have a look at, which is task 13. Okay, so no questions have popped in. So let's have a look at this second question. I like these questions. You guys might not, but remember, because this is given to you on a blank sheet, it means it's going to be marked by a person. So it's going to be marked by a human being. Now, remember, you can add in extra lines. I can't, obviously, because it's a piece of paper. So I can't add in extra lines. There's just a question there that's just come in, a personal one. Would you mind, Louise, just popping that in at the end of this question, just because I want to make sure that we obviously finish on time. So I will answer the question, I promise. Just pop it at the end in a few moments, if that's okay. Thank you. So what we're looking at here is how much inheritance tax is going to be paid on Carl's estate, and we need to show our workings and do our calculation. Now remember, you guys can obviously add extra lines in at the end. I can't do that on this paper. So you just need to make sure, because it is humanly marked, that you just take a minute before you start writing, that you make sure that you have obviously looked at how you're going to set this out. So I'd read it all first and then start to think about what I will need to do in this question. So Carl died on April 11, 2019, leaving an estate valued at £895,000, included his home worth 500,000. His wife Ellie died in 2015, and her estate on death had used up 70% of her nil rate band. He'd made a gross chargeable transfer in 2014, valued at 200,000, and Carl left his estate to his son. There's quite a lot of information there, even though it's only a couple of sentences. So he's left his estate worth 895,000. It includes a house, and he's left it to his son. What does that make you think of? Absolutely. So this is all on the death estate, remember, Alex. He's going to be entitled to the residency nil rate band. And we're going to have a look in a minute how that works. Perfect. We've also got his wife, Ellie, that has died before him, and she's used up 70% of her nil rate band. What does that make you think of? Super, perfect. We've got 30% of her nil rate band that we can use. Perfect. And Lucy, spot on. You just read my mind. We've also got her residency nil rate band as well. So super, spot on, perfect. So we've now looked at the unusual parts of information. We can start to pull this together into a pro forma. One last question though, what rate of tax am I going to be using when I calculate my tax right at the bottom? Super guys, well done. 40%. Remember, we're doing it on the estate, so it's what's left at the end. So when we calculate the tax, we're going to get 40%. Now, if you haven't got to that in your exam, that's the loss of an easy mark. So if a lot of this is confusing to you, you've got to try and show good exam technique and say to yourself, right, well, my last line needs to show tax at 40%, and you need to put a number in here to make a calculation. Even if the rest of your workings are wrong, good exam technique is that you make sure that you get to that point. Let's go through line by line then. So what would you do first? What would your first line be in this calculation? Perfect, chargeable estate, spot on. So chargeable estate, excuse the fact that I have to write this quite small in there, I haven't got much in. Don't have to add any values, they've told me the estate is worth £895,000. So you're absolutely right, Louise, if they do give you a list of things that go into the estate, you would add it up. In this question, we don't need to, we just need to pop in our starting value of £895,000. Good. What would I do next, guys? What would you do next? Not the residency nil rate band yet, absolutely spot on, the nil rate band, perfect. So you're absolutely right. Now there isn't any adding in this question because they've just told us the 895. We know that £500,000 is included within that 895, so we know we're going to get our residency nil rate band. But before we get to that point, we need to work out the normal nil rate band. So Kyle will have his own nil rate band. How much is that worth? Perfect, well done guys. £325,000. But he's also going to have part of Ellie's nil rate band, and you told me that he's going to be entitled to 30% of her nil rate band. Now remember, for those of you that aren't quite sure on this, it's always going to be the proportion is unused of the nil rate band that you get back. Now, because she's used up 70% of that nil rate band, she's going to be entitled to an additional 30% of the nil rate band at the value today. So I will answer your question in a moment. I'm just going to show this part first. So she's going to be able to have 30% of the value of today's nil rate band, which is £325,000. So she's going to have a nil rate band of 97,500 in addition to Carl's nil rate band of 325. So the question we've got, we don't add chargeable transfer, just deduct it from the nil rate band. Oh, we're going to do that in a minute. Sorry, I didn't understand the question. We're going to take off the gross chargeable transfer in a minute. I'm going to work out how much nil rate band I've got available first before I do that. So I will come on to that in a moment, I promise. Okay, so we can now work out how much nil rate band Carl's got. So he's got 325,000 of his own. He's got 97,500 of Ellie's, which means, thank you Louise, he's got £422,500 nil rate band available. Now, coming back to what I said what I was going to do in a minute, what do I do next? What do I deduct? It's not the CLT, but I know what you mean. It's the GCT, so the gross chargeable transfer. Now, the gross chargeable transfer is slightly different from the CLT. What a gross chargeable transfer is essentially the value of the gift taking off any of the annual exemptions, and it's basically adding on any tax that they've already paid. So go back to your notes and revise what a gross chargeable transfer is and how you calculate it. You should have somewhere in your notes a pro forma to how to calculate the gross chargeable transfer. And it's slightly different depending on whether the trust is paying the tax or the donor's paying the tax. So if that doesn't make sense to you, unfortunately, we don't have time to go through it tonight in our revision session, but go back through your notes. You should have somewhere in there how to calculate the value of the gross chargeable transfer. For the death estate questions, it's unlikely that you'll have to actually calculate it in your questions. If you are a first in tuition student, there is some good questions in the question bank that do help you practice, obviously, how to do those calculations. So any other provider should have something similar in there as well. But what we then deduct from our nil rate band is any gross chargeable transfers in the previous 7 years. So I'm going to take off that £200,000. They've already done the complicated working for me. So I now just need to take off that £200,000 from your figure. Now, I'm sure I'm about to anticipate a question here. Why didn't I just deduct that from the nil rate band at the beginning? Obviously, that is the same answer, but because this is marked by a human, I wouldn't want to try and cut out a step to miss that out. I'd want to try and show it on 2 separate lines because there will be a mark available for the nil rate band and there will be a mark available for deducting that gross chargeable transfer. So I would try and learn this pro forma because you will get extra marks by doing that. Good, okay. Why is there no taper-in relief? So what did we say? When do we have to think about taper-in relief? If I look back to those tax tables, what did I write? When you make a gift in the lifetime and then you have died at some point later, there is no gift in the lifetime here. They've left a death estate. The death estate is at the date of death. So you don't need to look. No, the gross chargeable transfer was in 2014. You're not calculating the tax on this gift. You are calculating the tax on the death estate of £895,000. So if you was calculating the death tax on that gross chargeable transfer, you would think about taper relief, but we're not. We're talking about how much inheritance tax will be paid on the estate. So just be really careful there to understand and read the questions properly. Good, so there was no tapering relief to worry about in this question because we're talking about the death estate. When you're talking about the death estate, there will never be any tapering relief because there is no time difference between death and calculating the tax. They happen on the same day. So what we'll do now is we're going to deduct the amount of nil rate band that's available from our chargeable estate. So we had 422,500. We take off gross chargeable transfers in the previous 7 years, which means there is £222,500 of our nil rate band available. Spot on, perfect. What's next then? Next is our residency nil rate band. And why is it times 2? You're absolutely right, but why is it times 2? Perfect, because we've also got the residency nil rate band from his wife, from Ellie. Ellie has died before him. She wouldn't have used up her residency nil rate band because it actually didn't exist back in 2015. But for it to be fair, he can have his residency nil rate band and his wife's as well. Now, someone just wrote £300,000. You're right, but I would never recommend adding them together. And the reason is because remember, this is marked by a human. So you want to make sure you get all of your marks and there will be marks available for both of them. So I would say next, I would deduct my residency nil rate band of £150,000. And then I would say Ellie's residency nil rate band of £150,000. Natasha, it's worth 6 marks. You're absolutely right there. You do need to do a quick little sense check as to how much is the home worth. It's worth more than that residency nil rate band, so we can have the full £150,000 deducted. Just look out for that. If it was only worth 200,000, the maximum you would be able to deduct would be the value of the home. So sometimes you might have to deduct a mortgage from the value before doing that calculation. So just be careful on that. Okay, last 2 parts then. Well, first of all, we've just got to solve our pro forma. So we've got our taxable estate, which is 372,500. Right at the beginning of the question, we said that we then calculate tax of 40%, £149,000 of tax. So for the last part, you'd just pop into your box £149,000 of tax. So there's a question there, if there is a mortgage left to pay, yep. So if you were told that the house was worth 500,000, but they had to pay back a mortgage of 100,000, you would take that off because it's not really in the death estate that has to be paid back before it actually goes into the estate. Not examined hugely often at AAT, but if there is a mortgage, you would deduct it. Good. Are there any questions on that? So that would be worth 6 marks in your exam. Any questions on that question there. Okay, super. So everyone's done really well on inheritance tax. It's a really complicated topic. It's very different from the other types of taxes that we do look at. So well done, lots of knowledge there. The best way to get through these questions is just to practice, 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 and do as much practice as you possibly can. So, Alex, if you got the answer right but didn't get some of the steps in, would you still get all 6 marks? It would depend, actually, on what you've missed out on. I'd probably say you're less likely to get the marks if you've missed out the steps but got it right than if you've actually shown all of your workings and got it. But if you had 149,000 as your final answer, I think the marker would be pushed to not give you the full marks. But I'd never recommend missing out any steps, especially on these longer part questions, because the marker obviously is giving you marks for your workings. Louise said, is this the hardest part of the book? It depends on you. It's really hard to answer that. I really like inheritance tax, so I find it a lot easier than some of the other questions in the task bank. So it completely depends on you. Generally, people do find inheritance tax quite hard because it's very different from everything they've seen before. Some people do income tax at work, or you at least pay it yourself, so they find it a little bit easier and a bit more familiar with it. But it depends on you, really. Everybody's quite different. If you need to drop off, thank you very much. Obviously, the recording will be sent out to you this evening. If anyone wants to ask any questions on anything that isn't on these questions, I'm not going to disappear for a little bit. That's absolutely fine. But if anyone is dropping off, remember you are going to get the recording in a moment. You'll also have a link to any of the other questions that we've done previously. We will have one more session next Monday at 7 o'clock. So I will send out the pre-work to that in a moment. And then from the week after, it will be moving to 5:30, so a slightly earlier time. Perfect. There was just a question above, so I will just scroll back to that. So why do we deduct the nil rate band before the residency nil rate band? We just always do. So in terms of the pro forma, remember you're not always going to get the residency nil rate band. If you'd done it the other way round, I don't think it would be a problem. But if you try and learn this layout, this is the way that you probably would do it, to do the nil rate band before the residency nil rate band. Good. You're welcome, Natasha. Good. Thank you. Bye, guys. Okay, perfect. I'm just going to turn off the recording then. If anyone's got any questions, I'm not going to disappear for a moment, so you can pop them in the chat box. I think Louise had a question earlier. But if you want to just pop that back in, I'm happy to answer that for you now. I think it was a personal one, so I might answer on the chat box. Good, thank you very much.